How investing $40 a week can pay for your child's tuition. Right here, step by step on the Investor Show. Once again, ladies and gentlemen, boys and girls and children of all ages, you are now tuned in to the Investor Show. I'm your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. Hit the thumbs up button if you like the video, and hit the thumbs up button anyway if you don't like the video. But check out the description box and follow us on our other social medias and check out our books and the supporters. But as always, I don't have a lot of time. And I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So $40 a week, how could it be invested to pay for a child's tuition by the time they're 18 years old? First step, how much is college and how much college will cost? We just use let's go to the national average cost of college. Right here, right? It just comes from studentdebtrelief.com.us. We're just going to pull it up. It says, in 2017 and 2018, public universities charged an in-state tuition of $9,970, right? That's what we're going to look at. Now, we know out-of-state costs more. We know private costs more, but we're going to look at public universities in-state costs $9,970 in 2017, 2018. Now, down here, it gives us a nice little statistic. And it says that 3.2% of public schools is expected to increase. The price of schools is expected to increase by 3.2% annually over time. So now we got to look at, okay, if school costs $9,970, how much would it cost in 18 years? Let's say if you just had a child. How much would it cost in 18 years? So we're going to look up our handy-dandy compound interest calculator. So here we have it. We put in our little calculator, we put $9,970 for 18 years, growing at 3.2% annually. And it comes out to be $17,576. That's how much college will cost annually in 18 years. Public in-state university, we're not looking at room and board, all the good stuff like that, just the tuition. So $17,576. And now we're going to assume that we're going to multiply that times 4. We multiply that times 4, we're going to come up with about $69,000 something dollars. So we know our target goal. We need to get to $70,000 in 18 years. How can we get to $70,000 in 18 years? Here's how we can do it. Now, we're going to use the same exact compound interest calculator. That's our secret. We're going to say on an annual addition, you put in $1,920. If you break down $1,920, that's $160 a month. $160 a month breaks down to $40 a week. $40 a week. Let's say mom pays $20, dad pays $20 per week, which is pretty much lunch. Right? And if you did that for 18 years, we put in 18 years, and you had the interest rate, let's say annually, this money compounded by 7%, you will come out to your $69,847. That's a tad bit shy of our $70,000, but it'll probably be like $42, $43, but to make it simplistic, $40 a week, right? This will pay for a child's tuition from the time they're born. If mom and dad invested $20 a week, dad invested $20 a week, and they did this for 18 years, and they earned 7% annually, they can reach their goal of $70,000. Now, the next question is, okay, Prince, where can I get 7% annually? Voila, look at this right here. Google S&P 500 average return. The average annualized total return over the life of the last 90 years is 9.8%. For 2017, it was just up under. So it was, when you Google here, what is the average S&P 500 return? The average annual from the time the S&P 500 started until 2018 has been 10%. And notice, I didn't put 10%, I used 7% because some people say inflation and whatever the case may be. If this money compounded by just 7%. Let's say we didn't even get to 10%. We just got the 7% annually on this particular money for 20 years, for 18 years, we can pay off our kids' tuition. Now, the second thing is, okay, Prince, you show me how to do this. How can I actually execute? You can actually execute this by opening up a custodian account with the TD Ameritrade, with the ETrade, with the Robinhood, I think does it. But, it's a plethora of brokers out there. I'm not sponsored by anybody. Plethora of brokers you can go to, open up a custodian account for your child. You can set up an automatic deposit where $20 comes out of dad paycheck every week, or $40 every 2 weeks, or, you can, however you want to break it down. Mom puts in $20, dad puts in $20. You can have this money automatically invested into a S&P 500 index fund. Low cost, no, because nobody's charging commissions anymore. So no commission, and let that money sit there and build. Have the dividends, and roll the dividends into the DRIP program, which is the dividend reinvestment plan, and let that money grow for 18 years. Now that I said that, I've showed you how much money you need, how much money you need to put aside, and exactly how to do that. Now it's the hardest part. 1, executing, actually doing it. 2 is being disciplined to stay along the way, because along the way, the market will go up, the market will go down, there will be crashes, you will have financial situations, you will run into recessions, but can you be disciplined enough to do this for the long term? And along the way, you will find out different things. Oh, well, I think I know better things. Or you want to try better things or different things. But to stay disciplined and to stay on one thing, that seems to be the hardest thing. But as always, don't forget that like, subscribe, comment, and share button. Drop some comments below. And until the next video, podcast, cartoon, or whatever else you see me do crazy around the globe. Peace, be safe, I'm out, and thank you.
Check out the latest installment of the multi-book series teaching kids about financial literacy. Wesley learns about insurance. Guest starring Broncos Hall of Fame running back Terrell Davis. Authored by Prince Dykes. Teaching kids the real-life skill sets that matter as they grow older. The third book in the Father-Son Financial Literacy series gives a kid-friendly introduction into the world of insurance. Award-winning and recently stamped by Warren Buffett. Available hardcover, paperback, ebook, and audio online at Amazon, iTunes, Audible, Barnes & Noble, Walmart.com, Tattered Books, and more. Hardcovers are only available at Lulu.com. Presented by Alpha One Tax and Wealth and Belco Credit Union.